Hey, this is the Mortgage Minute for Thursday, October 28th. In the news this week, one of the biggest things was a report on Business had a report calling the long shadow of Canada's housing market. Essentially, they're, I think personally, get more fear into the fact that we have a housing bubble on its way, and I don't think that's going to happen simply because we have Mark Carney telling us that probably a whole year of lower rates on the horizon. So, I wouldn't get all caught up in worries about a housing bubble, but I'll tell you something. I was talking to a client the other day, and this came up. They asked me whether they should take a variable rate mortgage. And the interesting thing was, they automatically thought that variable meant open. And that made me think, some people are very confused about the term of variable rates and terms in general. So when you get a mortgage, what I want to talk about today is the fact that when you get a mortgage, you have various terms you can take. You can take fixed or variable. And a fixed rate is closed, meaning that you're going to have a penalty if you get out of it. What most people don't realize is that if you take a variable rate mortgage, it also has two options, closed or open. Now, people will take an open mortgage so they have the ability to pay off that mortgage in its entirety at any time with no penalty. But the thing you need to realize is that if you choose an open option, you're going to pay a premium. For example, the interest rate on an open variable rate mortgage is probably prime plus about 0.8% right now. Whereas if you take a closed variable rate, and again, a lot of people don't realize you can have a closed variable rate. Yes, there's a penalty, but it's only a 3-month interest penalty. And more importantly, the discount on that is prime minus up to 75 points today. So here's the bottom line. Be careful what terms you're asking for and what terms you get. Never pay a premium for a benefit you don't intend to use. In other words, don't get an open variable mortgage if you intend to hold the property for more than a year. The extra cost is not worth the benefit. So be careful what terms you're taking. Make sure you're asking the right questions. And for more information, go to my website at peterkinch.com. That's the Mortgage Minute for Thursday, October 28th.